Well, hey traders, thanks for showing up. Again, as Renee said, I'm Dean Jenkins, founder of followmetrades.com. And today I'd like to talk to you about scanning, how to scan for great trades. I'm going to talk about how I do it. I'm going to give you my, the trade setups I'm looking for. I'm going to suggest a method you can use. And even if you're looking for different setups, I think you can get something out of this scanning method that I'm going to talk about, some of the tools and approaches I'm going to talk about. So feel free to ask questions as we go, make it interactive. I'm happy to take questions on the fly. And during the presentation, once I talk about just the strategy that I use, we're going to be looking at live charts, and I'd be happy to look at any stocks or any trades that you're interested in and give my opinion on them. Yeah, it's a two-way street. I'm going to give you some good trades, and who knows, maybe you got some good ideas that we would agree on. So Manana has a question. Is there a good book that teaches how to mark the Elliott Wave correctly? There actually is a good book. It's called Elliott Wave Technique Simplified by Bennett McDowell. And Bennett was my mentor, and I ended up writing a chapter in that book, and it outlines the simple, repeatable way to use Elliott Wave, and definitely how to mark up charts, okay? So I'm gonna go ahead and get started. Yeah, of course, I'm a trader. I'm not a financial advisor. So I'm going to talk about my method. I'm going to give some trades that I think are good, but whether any individual takes those trades, that's your decision. You assume the risk for that. Of course, there's risk in trading. So I'm going to do this. I'm going to talk about scanning. What I do in scanning is the first thing I do is create just a big picture. What's going on? What's going on in the financial world? What are the indexes doing? What are the major commodities doing? And then I create a thesis about what I think is going to happen. Now, I make my trades based on reality about what actually is happening, but it's good to create a thesis and then go prove or disprove it. You can think that the market responds to seasonal cycles. You can think that the market's about to correct or it's going to double from where it's at. Whatever your thesis is, then you go try and prove it, right? Because the ultimate reality in the market is price and volume, and you can make some good decisions just off price action alone, but you need a thesis to go look at a narrow section of the market. So I narrow that list down to a manageable list of charts that I can actually look at, right? Thousands of symbols out there, you can't look at them all. Then I get into trade setups, right? I'll talk about those, and we're going to scan for some trades. We're going to see if we can find them, okay? Now I'm going to try and pique your interest before we get into this. How am I doing? Am I actually making money, or are trades going well? Well, this is, I'm showing my screen from our live trading room, and these are stock trades that we're tracking. We've got about 7 short positions and about 6, 7 long positions. We're evenly split. And here's my position P&L column. So you can see out of these 14 trades, only 2 are underwater. The rest are in pretty deep profit. So these are the kind of trades we're going to be scanning for. Here's one. I'll show you one that we've been in a while, and it's really going well. This is PAGP. So Plains GP, it's an energy company. So we got short on this using my setup methods and the scanning technique at 31.76, and we're staying with this thing, and we're in nice profit. This blue line's where I got in. This red line's my current stop, and this green line's my target. Okay, and this is using Elliott Wave, and this is a classic Elliott Wave chart. Doesn't get any clearer than this. I'm going to talk about Elliott Wave, but just to show it now, this is an impulsive move, a correction, and now the continuation of the trend, and we expect it to continue down, potentially down to these Fibonacci extension zones, but we're looking initially just for a target at the previous low. So that's a short trade that we're in, and we're in very handsome profit on that without being in it really too long, 26%. Here is a long trade that we just got in that you might be interested. This is Valiant Pharmaceutical. We got in it on the 22nd. It's up already 16%. And this is a corrective wave trade. This is long, so we're long Valiant. And look at the massive down move that happened on Valiant from over $250 a share down to about 10, I think was the bottom. And this is beginning to retrace. You have to blow this up so you can even see current price action and make sense of what's going on down here at the bottom. But you can see it's breaking up out of a channel, and it's got a monstrous target up above $60. I was in the trading room. I was I was telling the folks in the room, right? You can see we had a nice channel here on the bottom, and it really looks like the retracement is coming. And we took an entry at 14.56. Again, we're at about 15% profit on this trade. We got a target up at 60, which would be, about a four bagger. I said, it could fail right here at this previous high and at about just over 30, and we would only double our money. Well, that would be really disappointing, right? That's not a bad way to be disappointed, as if you only double your money. So I just wanted to pique your interest a little bit about some of the trades and these are live trades, right? The trades that I'm showing, these are trades we've called out in the trade room. This is my TradeStation live account. You can see it's turned on, and I've got these positions in my account, right? I got my money on the line here with what I'm teaching and what I'm calling out. All right, let's go back to the slides and just talk about some theory here then. Okay, so big picture. I want to know what's going on in the markets. So we go back to the charts, and I think the S&P 500 is a good chart to look at. Gives you a pretty good view of the overall market, right? 500 biggest U.S. companies. Of course, it's been in an 8-year bull market, even just as recent as last week, put in some highs. But we've also seen, even though it put in some highs, it's in a period of consolidation, and it also broke out of that consolidation area with a low. You can see it was consolidating here, broke down yesterday. Now, today it's up a little bit, but I have a feeling, so here's my thesis. This is unfounded, right? I had to back it up with data, but I have a feeling that there may be some S&P 500 stocks that getting ready to correct, already heading down, and the S&P may be poised for at least a small pullback, maybe one of these numbers that it did earlier in the year, right? Or maybe the big one, right? Maybe one of these or even bigger. So it looks like my thesis, what I think, is that we could be getting ready for at least a modest pullback. So, okay, I've got a thesis. I wouldn't go trade that, that's speculative, but now I can go searching to see if indeed there are charts, there are stocks in the S&P 500 that have started down and have a setup that I'm interested in that meets my criteria. Okay, so let me talk about my trade setups, my criteria. So I use a combination of Ichimoku Cloud, Elliott Wave, and a little Dow theory in there to spice it up. Okay, so I call it East meets West because Ichimoku Cloud and Elliott Wave are two independent trading systems, and when they agree, right, when the criteria is met with both of those systems, that's pretty powerful confirmation of a trade. Okay, so Ichimoku Cloud, not to make this a complete seminar on Ichimoku Cloud, but it's got 4 elements. It's got a fast line, which is called Tenkan. It's got a slow line, which is called Kaijun. Pretty similar to 2-line simple moving average. So I've got them marked here on this chart. Fast is yellow, slow is purple. They're very similar, again, to 2-line simple moving average. The math is a little different. The math for Ichimoku Cloud takes the average of the highest high and the lowest low in the look back period and takes the average of that, whereas the simple moving average averages the closing price of the look back period. So a little bit subtle difference in the math. So the fast line, when we get a crossover, fast over slow, just like with moving averages, that can indicate a trend or a change in trend. We've also got this green line, which is called span A, and this red line, which is called span B, and then the shaded area between them. And these are derived from the Tenkan and Kaijun, and they're projected out forward in time. What they're projecting is a support or resistance area. And it turns out it's pretty accurate. So when you get a break through the cloud, through a support or resistance area, and you get a crossover, right, that can indicate a new trend and maybe some entry points. So I think that's pretty cool, pretty valuable. And you can see in a trend like this, price moves, price doesn't go in straight lines. It goes in higher highs, higher lows, higher highs, higher lows in an uptrend. And we're going to talk about that. That's Dow theory. It pulls back to the cloud, which is predicting, because all these were plotted several bars in advance, right? It is predicting some support areas in this case. So that's pretty cool. So I use Ichimoku cloud. I look for a break, and I want to take long trades above the cloud. And I want to take short trades below the cloud. All right. So I use Elliott Wave. A lot of people roll their eyes when they hear me say Elliott Wave, and they've read about it or they've been around practitioners. A lot of people just overcomplicate Elliott Wave. It drives me nuts, right? We use a very simple, repeatable approach to it. Again, I wrote a chapter in the book, Elliott Wave Techniques Simplified by Ben McDowell. It's on Amazon. It's a good addition to traders' libraries for sure. So we keep it simple. There's only 3 trade setups I'm looking for, right? I look at some Elliott Wave study guides, right? They got 144 permutations of various trends and points, and it's like, how? It's ridiculous. Who can memorize that or even spot that on a chart? I got 3 setups I'm looking for, okay? And so Elliott, Ralph Nelson Elliott, back in the 30s, interestingly, the same time that Goichi Asada was developing the Ichimoku cloud in Japan, Elliott was working on this over here in the US. They were on parallel paths. But he just said, hey, the market seems to move in waves. And there's a collective crowd psychology of optimism and pessimism that happens in natural sequences or waves. And that moves in impulsive waves, which is 3, corrective waves, which is 4, and continuation impulsive wave, which is 5. I don't try to do 1 and 2 or the ABC correction. So I try to catch a wave 3, right? Breaking out, a new trend beginning. If there's enough price, profit potential, I'll take a correction. And after the impulsive move and the correction, the continuation of it. I try to trade wave 3, wave 4, wave 5, 3 setups. That's all I'm looking for. And then we measure wave after the big impulsive move, right? You can't miss it on a chart. It's the biggest, most dramatic price move on a chart. After it happens and it starts to correct, you can measure, did it correct into a wave 4 with a Fibonacci retracement tool? After wave 4 happens down to a Fibonacci retracement level and you get evidence that it's starting back up, you can use Fibonacci extensions to predict where wave 5 is going. Pretty cool stuff. So how do we know when it's changed from an impulsive move to a corrective move and then into a continuation? Dow theory. Dow theory, Charles Dow, back at the beginning of the 20th century, published material that's still being used today and still valid today. But one of the things Charles Dow said was, hey, an uptrend is valid. You still have an uptrend because price doesn't move in straight lines, right? So if you see price pulling back, am I still in an uptrend? Well, it moves in higher highs, higher lows, higher highs, higher lows. And that you're still in an uptrend as long as this pattern remains and is not broken, right? As long as you can put in lows, but as long as it doesn't go below the previous lows, and as long as you're making new highs, you're in an uptrend. Downtrend, lower lows, lower highs, lower lows, lower highs, right? It's over when you start putting in new lows. You don't put in new highs, you take out previous lows, uptrend's over. Could be the correction beginning. Bearish trend, it's confirmed with 3 data points, a low, lower high, new low. And then it's over when we don't put in new lows, we start putting in new highs. So pretty, when you see it, you go, wow, that's simple. But if you don't have these ideas attached to it and these, words and pictures, sometimes you're in a trend, you go, is it over, is it ending? This gives us some nice evidentiary approach to it, to have proof. Is the trend still intact or is it over? And these points in a trend are good points to place stops, right? Because we want to stay with a trend for as long as it's going. We don't know for sure how high an uptrend is going to go. And we certainly don't want to jump out just because we've hit some arbitrary target area. We want to stay with the trend and let it run. And if it's over, we want to get out. So I put my stops at these higher lows. As new highs are put in, I put my stops at the higher lows. And then I'm going to get stopped out when the trend has changed. No, I won't catch the top, but I'll be able to stay with the trend for a long, long time if it's going to run. And that works really, really well for us. So I also, when I'm getting into a trade, it's got to have good math, right? It's got to have good math. And I want a high probability of winning. I want clear support and resistance areas to manage my stop. And I talked about placing that at higher lows in an uptrend or at lower highs in a downtrend. and I want a high reward to risk ratio on the target, on the trade. I want the ability to make more money if it wins than I'm going to lose if it fails. That seems reasonable, doesn't it? Okay. That's important for healthy trade statistics, because if you only have a 50% win ratio, but you have a 2-to-1 payout ratio, meaning your winning trades are twice the size, you win twice as much on your winners as you do your losers. If you're a 50% trader, you're very profitable, right? You only get there by picking trades that have the potential to make more than if they win than they would lose if they fail. Okay, so it's real simple. I calculate reward to risk by looking at the risk per share, which is my entry minus my stop. I never go into a trade without a predetermined stop. You can argue whether it's you should have, you know, stop market orders and whether the market makers are out hunting stops. You got to have a predetermined place where you are going to get out of the trade, whether you have a live stop order or not, in my opinion. So entry minus stop. So in this case, it's 56 cents a share. So that's my risk per share. I always have a target when I get in. I take a conservative target. And so in this one, the difference between my target and my entry is $1.64. We divide them, right? $1.64 divided by 56 gives me a 2.93 reward to risk ratio. Well, that works for me, right? If this trade wins, which it did, by the way, Merge was a beautiful winner, I'm going to make about 3 times more money than if it loses. Again, I only have to be a 50% trader if I'm trading trades like this. That's not too bad. Okay, let's look at charts. Enough PowerPoint, enough slides, right? Let's look at charts. And what I want to do is quickly scan. I want to quickly scan and see. Remember, my initial thesis was, I think the S&P 500, you know, today's little rally notwithstanding, I think the S&P 500 might be poised for a bit of a pullback. So what I can do is put the entire S&P 500 here. I got the S&P 500 index. This is TradeStation's radar screen. It's a nice table where you can place indicators in the table and get the numeric values of the indicators, and then, you know, take action and filter and sort on this. So I've got, again, the entire S&P 500, which turns out to be about 505 or 506 stocks. I guess they didn't want to change the name. And I've got all the Ichimoku Cloud values. I got the numeric values for Tenkan Kaijun. I've got the indicator saying, hey, your trend direction is up, meaning fast over, slow crossover, and the price is above the cloud. So that's my, you know, part of my criteria for a long trade is, remember I said I want to take long above the cloud, and I want to uptrend, and I want to take shorts below the cloud in a downtrend. Now the filtering tools here in TradeStation, they're okay, but what I'm going to do is I take all this data, right? And it's pretty cool. You can just select it all, you know, copy, and plop it on a spreadsheet. And now Excel is really nice because you can add formulas really quickly if you don't know a programming language, right? And you can sort and filter really fast. So what I've done is taken that table. I took it about a half an hour ago before I was logging in here. So this is the S&P 500, and I've got all my Ichimoku data here. And I've also written a couple quick logic statements in Excel where I said, hey, I just want to know if trend is up and it's above the cloud, that's true, it's a bullish signal. If trend is down and it's below the cloud, that's true, it's a bearish signal. And then I'm going, how close is price, current price, to the edge of the cloud? Because trend, when price is just breaking out of the cloud, that could be when the next trend is beginning, right? And the ones that are farther away may be more mature, and I don't want to go chase a trend, I want to get into it early. So what I can do is sort this. If my thesis was, I think there might be some stocks heading down in the S&P 500 that may have good bearish setups, let's just go see if I can prove that, if I can find some good trades. So I'm going to sort on bearish here, and I'm going to add, I want the ones closest to the cloud. I want price below the cloud, but just have recently broken out. Now I got a list. So I'm just going to scan through this really fast. And what I teach in my courses for my method is you ought to be able to spot a pattern in about 2 seconds on a chart, whether it's worth analyzing. And only about probably 1 in 10 to 1 in 20 charts are actually worth analyzing, maybe have good potential. to find a really good trade setup. So let's don't spend time, right? Let's scan through 10 charts in a minute or two and see if we can find the absolute best trade setups. So I'm just going to run through these real quick. SPLS. Let me get the chart. And I haven't checked this because I didn't have time. So this is real time. Well, that chart's a mess. We don't even need to look at it. Staples is an absolute chaotic mess. I'm not going to waste our time on that. MAC, no idea what MAC is. We're going to find out though. MAC is, we were looking for bearish trades. This one looks like it's got a big long correction down, and it looks like it's trying to come up. Now I want to see it get above the Ichimoku cloud, but it might be retracing with some decent profit there. Let's see, Amit has a question. He says, how do I consider what profit percent so I can exit? Yeah, I take my exits based on reality. I'll go back to one of the open trades, right? So I don't exit even if I hit a target. It's a good question, and I want to deal with it. Here's PAGP. This is a trade we've been in. We're in 26% profit. Some people go, take your profit, take it and run, right? But price is moving down in lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So you can see I've got my stop where it's lower low, lower high, new low. And now we've put in a low, we're coming up hopefully to a lower high and then new low. I'll trail my stop to there. I will stay with this for as long as this trend continues to put in lower lows, lower highs. I've got a target, but if it hits the target, I'm not getting out. I'm going to stay with it. I'll show you a long we took on Baxter. Kind of makes the point, right? Here's Baxter Healthcare. My target was 52.85. Well, it's at 61.04, right? You want to stay with these trends. These big winners are gonna tilt your trading statistics to your advantage, right? So stay with it as long as it's going and putting in higher highs, higher lows, higher highs, higher lows. Trail your stop. Take profit along the way. We scale out in thirds. So I was looking at MAC, DG. So Amit, I hope that answered your question. Dollar General. I saw articles that they're struggling a little bit, aren't they? Yeah, they are. Yeah, they are. It's kind of a chaotic chart. There was a big drop, a correction. It is bearish, but that's not my favorite. It's just too chaotic. If you see those other ones that I pointed out that were in, they're much more orderly markets. Nucor. This has already had 5 waves up, 3, 4, 5. So this could be a new trend. Doesn't really have clarity. This could be an ABC correction. So I think we could do better than that. UNP. I don't know if I'll find any. Maybe we should look for bullish ones with this rally going on. Dang it. This was looking good. What we got here is we do have a big impulsive move down, but this thing corrected too far. It broke the rules for an Elliott Wave. Too bad too. DNB. That would be Dun and Bradstreet's, wouldn't it? And it's already had a big dramatic move down. I think we missed that one. GIS. Hope we find something here. I said in the description I'd give you at least 3 trades. So I'll give you ones that we got if we don't find any new ones. General Mills. Yeah, it's already retraced. It's probably gonna find some support down here. Yeah, I'll be looking at your trades in just a minute. PEG. I was just hoping we would find something. Nope. I told you I had to scan 10 to 20 trades to get a good one. AT&T. No. KMI. KMI, that's funny that KMI would come up on the list. We are short KMI right now, and I believe you still have room to get in, so I found you one. Yeah, there we go. That's what I'm looking for. There was a big impulsive move. It corrected into a Fibonacci zone, just hit it. and now it started back down, and there's lots of room to the target. I've already got it on here. So we got in short at 2032. You can see it's on my list here, short KMI. We're in about 6% profit on this trade, but you can still get in. You can still get in. Current stop on this one, we haven't trailed it yet. Current stop is 1985, and you just, how do you know it's still a good trade? Well, we look, current price is here. Here's the stop, and we look at it as a ratio down to the target, right? Down to the target, we've got it $12 for Kinder Morgan, right? So the distance from the entry to the stop versus the distance from the entry to the target, this is huge. So there's one good trade idea for you, Kinder Morgan, if you're looking for one. Okay. So go ahead and start typing in any symbols you would like me to look at, trades that you're interested in, and I'll be doing that. I think we're going to wrap up here. AA, wrap up the scan. I found one for you. Alcoa. It looks like they did a new release or something. There's pretty limited data on this symbol here. DVA. Oh, you can see I've analyzed it before. This is a good trade. So the DVA is a nice short. There is a impulsive move down, a perfect correction, and clear evidence, lower lows, lower highs, and under the cloud here of this thing heading down. It's got negative momentum on the oscillator. So we got a price target, 55.84 is the top end of that, and you'd probably want to stop on this. So there's a trade idea for you right there. I like that one. DVA, DaVita. Okay. Let me look. So how many have we scanned through? We've scanned through 13 and we found 2. So that's about the average hit rate. Let's do 1 or 2 more. He said it doesn't take that long. You can disqualify a trade pretty quick. Disney was looking like a pretty good short, but no. D, what is D? Dominion. Pretty sloppy chart. Look how chaotic that thing is. It is turning bearish, and there is a pretty nice correction zone, but you would need pretty wide stops. Look at the way this thing swings around. That's a pretty chaotic market, but it does look like it's got a correction started. It has broken down through the cloud, and it's got a target zone down here. It's not too bad. A little choppy for me. I think there's better ones out there. All right, let me go look at your charts now. Louis, SPWR. I like it. Everybody give Louis a hand. I've marked this one up before. Yeah, despite what everybody would, or a lot of people would think about the fate of renewables in the current political environment, this one and a couple others are looking really good. See how it had a big, huge move down. It channeled forever. Now it's broken that channel clearly. It's got a target up here at 1382, which is the low end. It could go anywhere up into here. So that's a really nice one. I would not hesitate to take that trade right now, Louis. So good job. He asked about another one, so we'll look at your other one, Louis. Vale. So Vale is a potential long. This is a Brazilian mining company, I believe. Look at this impulsive move. We traded this move up here. This was awesome. It corrected perfectly. This is a great shape, right? Big impulsive move, can't miss it. That's wave 3. See how simple the Elliott wave is when you just look for the big moves? Big correction right into the Fibonacci retracement zone. Now it's starting to break up. We want to see it get over the cloud, right? And we don't have to try and catch the absolute lowest price. I'll trade a few cents of entry for a higher probability on the trade, because we got a target up here above 13 bucks. If this breaks up, that's going to be a monster. So that's a great one, Louis. Good job, man. Tom's going to ask about X. I've looked at it. Tom, you're not going to get a gold star on X. I've traded it. It's a very tradable stock, but problem is it retraced it, so it should be a bullish trade before long. It's got to break above the cloud. It's got a ways to go. Here's the big impulsive move up. Here's the correction. These gaps, sometimes these gaps are real overhead resistance. So you have to let it get up past this gap over the cloud. By the time it does that, there may not be enough profit left in this thing. You have to measure it then. So that's the deal right now. Alexander's, what time frame is the best? They all work, right? The market is fractal. All these patterns show up at any level of magnification, so any time frame. Intraday, I track on, I look for the big trend intraday on a 10-minute chart. I don't take entries off a 10-minute chart, but here's the S&P 500 10-minute. And we're actually tracking, here's the same pattern, right? What we saw was yesterday, this big impulsive move down. We're seeing a retracement to it that just got a little too high, and now it's reversing. So it didn't close above that. So if we do start down from here, we could see a move down to here under 2418. Not proven yet, and by the time it proves it, there may not be enough profit left in that trade. But point is, it works on any time frame. Works on any, they're fractal. Apple. What about Apple? I'm actually a little bit bearish on Apple. You can see, you know, massive move up for quite a while, putting in lows, lower low, lower high. If we get a new low down below about 142.22, I think there's a pretty good chance of getting down into this target zone here. So maybe an opportunity to short Apple coming up here pretty quick. CHL is Niraj, hope I say your name right. And he's talking about CHL with a head and shoulders. So head and shoulders isn't a pattern I look for. So what we had here was a big 3 down, 4 up, 5 down, probably now an A, B, and then maybe a C up, but it's under the cloud. So it's lacking some clarity at this point, and it's a little bit low volume. It's a little thin too. So I'm not crazy about CHL. It doesn't meet my criteria. My method's not the only one on the planet, right? It works. It works for me and my subscribers. We're making pretty good money. IWM. The Russell 2000. So nice day today, huh? I'm a little hesitant to go long, right? This far into the trend, into the rally. So we showed S&P 500 showing some signs of heading down. If this reverses, there could be, you know, if this breaks the cloud, there could be a pretty good opportunity to short it, but it's not ready. It's not qualified yet. We got to wait on that one. Okay. Okay. Yeah, Evan, SPWR, and Vail. Those are stocks. Those are stocks. Those are both stock symbols. Amit says, what are my best combination of indicators and oscillators? So, you know, I rely heavily on Elliott Wave theory on Ichimoku cloud, which is an indicator. Elliott Wave is an analysis technique. I use Fibonacci tools to measure retracements and extensions. This is a price oscillator. It's called the OWL. It's from traderscoach.com. It's helpful. This is an RSI-like trend filter. It just tells us extra confirmation. When it's green, it predicts more highs, and you can see what triggered green here. It was absolutely correct. It predicts more lows. Absolutely correct here, right? But it doesn't give you any kind of price target. So it's just an additional confirmation. So those are the tools. Yeah. Okay, well, I'm getting close to the end of my time here. So if you like what I showed you here again, and you know, here's our results. We got 14 open trades in the trading room, trading these primarily on daily charts. These are stocks. I do call out an option contract for stock positions for those who would like to trade it, and that's how I trade it. I'm taking these again in my live account. There's all these trades that we've called out here in my live account. And so if you'd like to join the trading room, that'd be awesome. We'd love to have you there. And it's pretty reasonable. So this is what we do every day. We look for trades and we manage them and update them. So here's the offer. List price for the trading room, $79 a month. You can get in now, 25% discount at $59 a month. And it's a 30-day money-back guarantee. So you can come try the room. And if you go, nah, not my thing, no questions asked, no hard feelings. Send me a note, give me a call, give you your money back, right? I don't want anybody, you know, there that doesn't feel like it's a good fit, right? My trading method works for a lot of people, it works for me, but you know, not every shoe fits, and that's fine. We analyze the E-mini, gold and oil, and we track the news and big reports, but we're trading with stocks and options, short-term and long-term. The room's open Monday through Thursday, 6:15 to 9:45 Pacific time. I'm on the West Coast. That's 9:15 to 10:45 Eastern. So that's the deal on the trading room. And again, wow, what did I do with PowerPoint there? Made it go crazy. I will post this link for you, and got a tiny URL you can type as well. But let me put this in the chat box. Make sure I send it to everybody, not just the panelists. Okay. So that's what we got. I'd be happy to answer any questions. I think I got about 4 minutes left. Again, 30-day, you know, $59 a month, pretty reasonable, and 30-day money-back guarantee. So, you know, if you liked anything about what we were doing here and you're available in the morning, yeah, come join in. See if we can find you some good trades and give it a shot. If not, give your money back. All right, I don't see any questions coming in. If you had any other symbols before my time is up, I would be happy to check those out as well. Just go ahead and type them in. Squeeze 1 or 2 more in. We did identify a couple good trades as promised. NASDAQ. So it's going to look pretty much like this. Here's the QQQ on a daily chart. Now we do see, just like Apple, this is very similar, no surprise to Apple. We do see some early signs, see, of this lower high, trying to put in a new low. Momentum's really dropped off. So we could see a decent short opportunity coming up on QQQ before too long. Not too bad. UNH. That is United Health Group. Just off to the races, right? I'd been looking, you know, what a magnificent trend that has been from 109 up to 186. Way too late to try and get long, too early to get short. So we got to wait and see if when and if, you know, trees don't grow to the sky, stocks don't go up forever. There will be a correction, right? We just got to wait and see when it happens. All right. Well, I think I'm up against the end of the time here. Hey, thank you so much for showing up and for your questions, for the charts to look at. I enjoyed this very much. And Renee and Investor Inspiration, thank you so much for having me back again. I look forward to it in the future. So everybody, trade safe, use risk control, keep your winners big and your losers small. And I'll catch you next time. Thanks.